Hello and welcome to KYC. I'm Hiral Dadia and with me is Vaisha Chandani. And the company on KYC's radar today is Saatvik Green Energy. A new listing as well, so not too much that we have in terms of stock performance if you have to go back to history. But let's understand what we should know from the company and what we should know about the company as well. From the management, we want to look at the order book pipeline. What does that look like going ahead? Because currently, there was some bit of weakness in the second quarter of FY26. What will that look like in the second half of FY25? 26, I beg your pardon, will be crucial. The outlook when it comes to the B2C business as well, because they've launched an on-grid solar inverter. So on the back of this, how is the B2C business going to stack up as well? And the revenue visibility that the company has with the capacities that are coming up in the Odisha region. So these are a few of the questions that we should be watching out for. Varsha, anything that you would look at?
Yes, so outlook on margins definitely, because we have seen, margins kind of have seen the volatility. So, and also because they are coming up with a cell capacity that is nothing but a backward integration, which might help margins for the company. And also we'll talk about the price realizations. Is company seeing any kind of pressure in price realization? That I would want to know. And every company is going into BESS.
Yeah, BESS is becoming a very crowded space now.
That's the hot segment currently when it comes to solar industry. Would want to know what's the opportunity a company is eyeing on. Then of course on debt to equity ratio, though if you see that there's no long-term debt when it comes to Saatvik's balance sheet, but they do have short-term debt, so want to know the outlook on the same. And of course, the client-based diversification, that the company has a client's concentration risk, so also want to know how they're going to diversify when it comes to their, revenue from the top 10
This is going to be
clients.
interesting because they have some deferment in terms of sales as well that has happened from the second quarter to the coming quarter. So we will be eyeing that. So we will be talking about all of this to the management, but let's quickly understand and tell you what Saatvik Green Energy is all about. We'll tell you in terms of the company. First up, manufactures operational solar photovoltaic modules, and they have a capacity of nearly around 4.8 gigawatts. In fact, they've added capacity of nearly 1 gigawatt as well, and this is in Ambala. This was done in the second quarter of FY26. When you talk about the EPC segment, currently an installed base of around 69 megawatts is what you're looking at, and this is number as in FY24. And their order book is at around 4.68 gigawatts. So that's with regards to the overall business and the order book. Varsha, if you can take us through in terms of the revenues, the splits, what is that looking like?
Yes, continuing on that, so the major revenue comes from, that is 70% of revenue comes from manufactured goods, which is nothing but modules. So they make modules which are used in your solar value chain. Also, the traded goods contributes almost 26%, and rest EPC projects, it's in single digit, that is 3.4%. So mainly, the revenue is coming from modules, and the cell capacity that they're gonna come up with will be actually used to make modules. So basically, cell capacity will be nothing but a backward integration plan for the company. So overall, it's a module company. Solar module company, I would say.
And what's interesting is 99% of their revenues come in from the private clients. Government exposure is nil, so the margins that they have in terms of businesses versus other players in the same sector, they have that advantage as well, mainly on the back of the private exposure that they are sitting on. But the question over here is, little over 50% of their revenues come in from a very few clients. So the concentration risk is pretty high.
Yes, and also, exports almost contributes 1.5% of the overall sale. We would want to know what is the target contribution that the company is going into. And they've also recently won some orders. So basically, there are repeat orders of around 638 crore for solar PV modules. And also, they've also launched Uday series on-grid inverters. So this is nothing but the entry into B2C segment, which Hiral was one of your questions that you wanted to ask to management. And also they have the new orders secure of around 219 crore. So this is also a company that is eyeing on. So overall the order book, Hiral, looks strong. We would want to know what are the execution timelines for the same.
Yeah, the upcoming projects look pretty interesting as well. So let's ask the management then as to what would these upcoming projects actually add on when it comes to their financials. So that is going to be crucial. But let's quickly take you through all the rating parameters from here on. We'll be looking at the income statement, balance sheet, cash flows, return ratios, the shareholding, street credentials, valuations, and outlook. Always the normal. These are the 8 parameters that NDTV Profit considers on Know Your Company and rates the company's basis that. But first up, let's look at the income statement. Now, in summary, if you have to talk about Saatvik Green Energy, it's undergone a remarkable period of financial expansion over the last 3 years, which is culminating in a breakout performance that happened actually in FY24 itself from the previous years. The revenue growth was pretty high, a significant surge that did come in terms of profitability and the operational efficiency that we saw as well. That's visible in your 3-year compounded average growth that you see in terms of revenues, EBITDA and your net profit. Now, we've given it a neutral rating and I'll tell you why. The reason being the second quarter numbers, that's where the downtick has come in. Now, from the second quarter, if you see, if you have to compare, the margins have seen a reversal. If you talk about a number, it's down almost 3.6%. Your net profits are also down on a sequential basis by 30%. EBITDA revenues again down in that range of 16 to 31%, though year on year has seen an improvement. Now, because of that sequential dip, what is the outlook looking like going ahead is going to be crucial, but hence a neutral rating mainly on the back of the way the second quarter of FY26 has panned out for a Saatvik Energy.
Talking about balance sheet, let's look how balance sheet is looking. So overall, if you see, though you're seeing this increase in borrowings from 263 crore to 528 crore, but this is mainly because of the increase in short-term borrowings. And also we would want to know what is the outlook when it comes to debt. But overall, we have given a neutral rating for that because of that borrowing number only. And the good thing is, if you see the cash in bank, which is increased from 17 crore to 684 crore in FY25. Overall, the reserves, that is other equity, has also increased on the back of good profits that the company has seen over the last few years. But yes, borrowing is one thing which, one of the reasons why we have given a neutral rating for that.
Okay. Let's look at the next aspect, which is cash flows. Now, if you have to look at the cash flow statement, it's very interesting because your operating cash flows from a 44 crore, it's actually jumped to almost 197 odd crores by September 2025. So that's a strong growth coming in there, which is actually telling you that the profitability that the company has been earning, that's being converted as well into the balance sheet. The net cash flows also from a negative cash flow in FY24 and 25, in fact, till September 2025, that's in the first half of FY26, it's been pretty strong at 276 odd crores, because of which we've given it a thumbs up in terms of cash flows, Varsha.
Yeah, talking about ratios, we've given a thumbs up over here also because good numbers that we are seeing when it comes to ratios from, in FY23, the return on capital employed was almost 60%. In FY25, which has remained at 60%. There was a good uptick in FY24, that is at 64%. But overall, on an overall basis, a 60% is not that bad number when it comes to return ratios, and hence a thumbs up when it comes to ratios. Okay.
Let's move on to the next parameter that we are looking at is in terms of the shareholding pattern. Now, nothing has moved because it's a recent listing, 76% held by promoters. Now, the reason why we've given it a thumbs down is because of the low FI holding. DI is around 8%. The free float also with regards to the public is around 15.5. Now, as soon as, the FI DI interest starts improving from quarter to quarter, I think that's what will take this thumbs down to become a thumbs up. But right now, it's a thumbs down.
And, since it's a recently listed IPO, we don't have much data when it comes to the street cred or the returns to investors. But basis on the data, it has not given much returns to investors if I were to talk about. Since listing, the stock has given only 3% returns, and in the last 1 month, the stock is down actually 13%, and hence a thumbs down when it comes to return to investors, because pretty much it has not made money for investors as such.
Okay. So that's with regards to where the street cred go. Now look at valuations. It's very interesting because it's one of the cheapest stocks if you have to compare any of the peers, which is trading at 24 times trailing 12-month, if you have to look at the price to earnings, versus a Premier Energies, Wari or a Vikram Solar, and hence a thumbs up in terms of valuations coming in there.
And talking about outlook, now here is what the next leg of growth when it comes to company, because they're expecting revenue and EBITDA to grow at a similar range, because if you see the revenue has grown at about 80 to 85% CAGR basis. That Odisha plant, which has 4 gigawatt of modules and 4.8 gigawatt of cells, is on track, which is expected to start by March 26. Now this will actually have two things. One is revenue visibility, and of course an inch up in EBITDA margin because of the backward integration that the company is doing into the cell manufacturing. Also, they've also launched inverters, that is Uday series, solar pumps and best EPS solutions, which will help company to grow forward. And they also have plans to backward integrate into ingots, into wafers, which are nothing but the raw material used for for solar modules as well. So overall, a good uptick when it comes to outlook, because the next leg of growth comes from the Odisha plan, and hence a +1 when it comes to outlook. But also wanted to talk about the risk factor when it comes to this company. Forex impact and IPO related expenses are some of the risks, but weather delays and GST related disruptions, which has led to weak Q2 numbers, is one of the risks that the company has. And they have also heavy dependency on utility segment, and if the Odisha ramp up doesn't pick up, that is the major risk that the company will be facing, because if investors are actually betting on the Odisha ramp up because of the revenue visibility that the company will see, and of course the inch up in EBITDA margin. So these are some of the risks which investors should watch out when it comes to Saatvik.
Okay, so these are few of the risks that you should be watching out for as well. Thank you, Varsha, for that, because that is very crucial. But let's quickly take you through the rating parameters. Two neutrals, which is the income statement and balance sheet cash flow return ratios, are a thumbs up. On the other side, again, a 2 thumbs down and a 2 thumbs up coming in from a valuation and outlook perspective. And this takes us to an overall rating number of 5:8, which is a very strong number for a newly listed entity to get as well, I think. Because, this is what we were considering, whether what should this company be rated, and any further improvement can just take it upside. But let's get in. Prashant, Mathur, CEO at Saatvik Green Energy, to join us on the show and speak to us about what is brewing with Saatvik Green Energy. Prashant, welcome to the show, and it's always a pleasure to speak to you as well. In terms of the kind of performance that we are looking at in terms of numbers, FY23, 24, 25 for that matter, 26, we've seen a sudden blip that has come in the second quarter itself. What is that telling us in terms of trajectory from here on? Is it a one-time blip that we are seeing a sequential decline and everything remains the same and we'll be back to those kind of numbers? What is the reading?
Good morning, and good morning to all your viewers as well. And thank you for inviting me on the show. Saatvik has been growing at a CAGR of 88% for the last few years. And we continue to grow. The blip, you call it a blip, but actually we grew at over 133% year on year. And also our PAT also grew by 146% year on year. So it's not a blip, but yeah, compared to Q1, there were two reasons. One was very heavy rainfall, and most of the projects are on the site, requires manpower to be working there. So when you have deep water, the site are disrupted. The other thing was there was a GST reduction, which is actually very good for the industry. But, since there was a reduction in the GST from 12% to 5% on solar panels, so most of our customers, they postponed their purchases and they asked us to invoice after 22nd of September. I think this was for all other goods as well. So there was a transport and trucks and logistics issues, which kind of we were not able to ship the goods. And that's why you see a number which is little cooled off, though it's still a very significant growth over last year. But we are very confident that we will be showing a recovery in the Q3 and Q4.
Hi, Mr. Mathur, Varsha this side. Thank you for coming and speaking to us at NDTV Profit. Just wanted to know that since you have grown at like 85 to 88% of CAGR in the last few years, wanted to have what is the revenue target that you've set for yourself for FY26, because I'm assuming the Q3 would be very good because of the sales deferment which was expected in Q2, number one. So FY26 revenue for FY26 revenue growth, and also outlook on margins. Where do you see the targeted margins, EBITDA margin in FY26?
So historically, the second half of the year is better than the first half of the year because post festivals and rains, site activity increases, and so the dispatches and the installation increases. I would not be in a position to give you a guidance on the numbers which we are targeting. But what I can say is that we will have a decent growth year on year, and we will continue on our trajectory, going forward as well. In terms of margins, quarter one margins were very high, and around 19.5%. But the industry, for a module manufacturer, even if you're getting 15-16% EBITDA, it's a decent number. In the first quarter, we were able to do higher because we had some orders which were at a higher price. But what I can tell you is that EBITDA should remain in a healthy double digit, and this will continue for the rest of the year as well.
Mr. Mathur, so this was just for FY26, because you're coming up with a cell capacity on the back of your Odisha plant, which should inch up your margins going forward in, say, medium term, in, say, next 2 to 3 years. If you could, give us a number for a long-term EBITDA margin that you're eyeing.
Cell, what we are projecting is will give us a additional blip of additional gain of about 3 to 4% on our EBITDA. And that will reflect in our FY27. Cell will come in the second half of the year, though the capacities will come at the beginning of the next financial year, but it takes time to stabilize the cell plant. So we are calculating the revenue from October of next year. So we should see again in the cell capacities. So additional about 2.4 gigawatt will be up in the second half of the next year, and then we are adding more capacities which will come at the end of the next financial year.
Okay.
So that will give additional EBITDA.
Okay, so the order book that you're talking about, what is that conversion going to look like? Because you're talking of a strong order book, you're talking about capacities that you're adding. So the expected run rate of execution in the second half of FY26 and 27, what will that look like?
So if you see our order book, currently we are, we have, our 98% of our capacities are booked for the rest of the year, and this order book is for 9 to 12 months. We will start booking more orders for our Odisha plant because module capacities will be coming in the last quarter of this financial year, and we should be able to get revenue from it from March or April of 26. So more orders will be booked. Apart from this, we also have spot and retail orders which are not visible in the order book because those orders are coming and getting executed, in every month or so. So our order book continues to grow based on our capacities because for the next financial year, our capacities will be 8.8 gigawatt. Which today is 4.8. So we will see a significant jump in our order book and revenues in the next financial year as well.
Understood. And Mr. Mathur, so you've quantified us when it comes to EBITDA margin on the back of cell manufacturing. But if you could help us, what is the expected top line because of this addition of module capacity that you're adding for, say, in the next 2 years?
Difficult to again quantify the number, but what I can say is, to look at the future, you have to see the past. And if you see our numbers for the last 3 years, we have consistently grown our revenue, our production, almost at doubling it for last 2 3 years. So we will continue with our growth path, and also getting into backward integration, not only with cell manufacturing, which is the first step. We are also adding our ancillaries, so we will soon be able to give you an update on our encapsulant production as well. So that plant is also under commissioning right now. We are also getting into further backward integration into ingot and wafer manufacturing. We are bringing new product lines. EPC is there. We have gone into inverters, solar pumps. We are also adding new product lines as well, which will be announced in the due course of time. But we are focusing on a fully integrated model, and that will give us not only the boost in our revenue, it will also give us a boost in our profitability overall.
When you're talking about, Prashant, the Odisha facility integration as well from here on, what is the anticipated cost per watt for the new N-type TOPCon cells and modules that will be manufactured in the Odisha plant? And how will this actually position you to the current cost structure of any of the Chinese manufacturers as well, because it considers a heavy capex?
Difficult to compare with China, but the capex, what we are doing, the depreciation which we are calculating, is about 20%, and so the payback period for the equipment is 4 to 5 years. And TOPCon is the newest technology, and with the kind of additional EBITDA which we are forecasting of about 4 to 5%, we should be profitably doing it. Chinese cost will also be like for modules. We are very very close to the Chinese cost for cell also, because now India is kind of setting its foot in the cell manufacturing. It will take time. Once we have the economies of scale, and we have large manufacturing base, we will be able to compete with the Chinese cost as well. Also, when we are also, as we are getting into developing the entire ecosystem in India, ingot and wafer also are an important ingredient into the cost base. So that manufacturing also comes in Europe. So when you have an entire manufacturing ecosystem built in India, we
Right.
will see that we are very competitive to the Chinese cost as
Right.
well.
Mr. Mathur, last two quick questions. One is on the BESS, because according to your RHP, you were awarded with 30 megawatt of projects when it comes to BESS. So what's the status of that? And also, you forayed into B2C on the launch of the inverter. So where do you want to take this revenue of solar inverter in FY27?
So for the BESS project, the land allotment has been done, and we have applied for the transmissions approvals. So once that we get, then we will be able to execute that project. We are also bidding for other BESS projects as well. So that is well on track. The other question was for inverters. So for the B2C, we have just started our inverter sales, and this is part of our B2C initiative, because we are already in that space, in the residential space, where Saatvik is a very popular brand, and there was a lot of requests from our customers to add also into the other product portfolio, and inverter being the second most important product in a solar residential rooftop. And so inverter is going to be a small chunk. I would project to be about maybe 4 or 5% in the next year, but it has the potential to become a good revenue spinner in the future.
Right. Well, got it. Well, thank you, Mr. Mathur, for joining us at NDTV Profit. It was a pleasure speaking to you. Thank you so much.
Thank you very much. Good day.
Well, Hiral, the key takeaways from this conversation, H2 would be better than H1 and Q3 may see a good bump up. Also, they're expecting double digit of EBITDA margin when it comes to FY26, and they'll see EBITDA margin of additional 3 to 4% expected due to the cell capacities that will be online, right? And also, the revenue and margin will sustain for FY26 the track record that they've seen of almost 88% of revenue.
And this is very important because the kind of blip that they saw in the second quarter of FY26 was probably telling you there are troubles, but this is what we will have to monitor, investors as well, to understand if the performance is going to continue. But completely out of time. With that, it's a wrap on this edition of KYC. From Varsha, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.